Hey, what's going on, guys? Welcome back to Let It Grow Investing. I'm Jeff. We're going to get into some market news and all things investing. So, thank you very much for being here. Yeah, we've got a little bit of a mixed bag of things this week, right? We had a CPI come out, that inflation metric, and we're trying to decipher what in the world the Fed is going to do as far as rate cuts go. So, we've got jobless, those numbers are going up, or unemployment is going up. We've got less jobs being added. We've got a bunch of information kind of skewing one way. And then in the next breath, we've also got inflation rising higher than what we anticipated. So all those things, right? We've got a lot of different things to cover, but please make sure that you like, subscribe, and share. It definitely does help get the podcast out there for other investors like-minded that want kind of the news without all the hype. We'll try to cover what we need to cover and get on with your day, right? I don't want to hold you hostage to anything. So we're going to dive right into it here. We've got hold on, let me go ahead and share just what we were looking at over here on Yahoo Finance. Click the wrong thing. And we've got, where's Yahoo Finance? Stock market today. We will share that one. So yeah, we've got, this was stocks closed at record highs on Thursday as the latest reading on inflation showed consumer prices were up in August. Jobless claims rose to their highest level in nearly 4 years. The data helps set expectations for the pace of interest rate cuts going forward. We were looking at the FedWatch tool. We were looking at this one last episode, right? And I think it was about 89% saying we were going to get a quarter basis point or 25 basis point cut. And then we were looking at only 11% saying we were going to go with that full 50 basis point cut. So yeah, we've got right now, we are looking at these numbers actually coming higher. They were a little bit more in favor of going 50 basis points, but now we are back as CPI rose in the month of August. We are now back up to 93% of economists saying that we are getting a 25 basis point cut. So what does that mean? Well, it's a mixed bag out there for investors, right? It's a mixed bag out there for pretty much anyone that is going to be looking for a job or looking for a house or anything else, right? So we've got less jobs and life is more expensive. So there's less disposable income. That would generally mean less leisure and travel, although that is an ongoing trend that is kind of difficult to stop right now. You know, you got companies like, obviously Visa, MasterCard, but then we got Affirm and all the other buy now, pay later type plays that are out there, right? So we're trying to decipher if the consumer can really hold up to what's going on out there. There is some pressure in used cars or borrowing on used car notes. I think there's more delinquencies that we have been seeing lately versus even in years past. So there's more pressure in that space. So I have seen things like AutoZone doing better, keep your car on the road for longer, O'Reilly's, we've seen those. We've also seen stocks like Open Door, which is a meme stock at the moment. I'm not going to say that it's not. We have seen a lot of volume, a lot of action when it comes to Open Door. Open Door is going to be a housing type website where you're going on there to buy homes. So let me see on this one. We're going to go ahead and share that. We've got Open Door right here. We're looking at a just catastrophic rise, right? We were looking at a stock that was 53 cents in June and, $9.17 as of Friday's after hours, I'll say. So 9:07 at the close, a 9:17 after hours. So if you've been in this one, I mean, you've done fantastic. I don't think that the stock is worth this. I think that there was a lot of short interest, and then a lot of the meme stock people came in buying this one, and then those shorts had to cover, and they had to buy back their shares at a higher price. So there is a lot of volatility in this thing. If we look at the 5-day, we'll see from 6 up to almost 11, then back down to 9. Probably even more so on the 1 month. Yeah, we were down near $3.17 up to a peak of 10.70. Just absolutely crazy options or actions in Open Door, right? We've seen a absolute ton of volume. I think it got over, it had over 1 billion shares traded on maybe Thursday, right? So just the amount of people trying to play this thing is insane. So Do I say get into this? No, I really don't. I mean, if you're a long-term investor, I don't know that it's a spot for you. This is one that you've got to buy and kind of know your exit point, right? And know that it can drop back down to 4 in the blink of an eye. If some of these whales that are meme investors got into this thing, they're buying tons of shares and then they dump them when they double or when they hit their 30% gain or whatever goal they have on their own shares, know that they can come right back down, right? So is there a reason that I think that housing stocks would do better? You know, Redfin, Zillow, Open Door, whatever. Yes, I mean, as rates come down, you're going to have more people buying homes. But we've also got to think about is this stock where it should be valued, or is this simply just meme stock territory? And for me, it's meme stock territory. So you are playing with a lot of fire. There is about 84% of downside from analysts. Right now, this is going to be before the meme stock craze, I'm sure, hit. But I mean, even on the high end, the analysts only think it's actually worth about $4. So you might see a shiny coin that you might want to pick up, but I'm saying it's probably something that if you are not an experienced trader, is probably not for you. And we'll go back to this one. We'll go back to Figma, right? That was going IPO earlier this year. We saw this thing go up to like 140. Let's take a look at the chart on like the 3-month. That should get us a pretty good picture here. Yeah, that's at 122. Maybe we got to go back a little bit more. I think it did hit 140 or 150. Let us see. Is it not going back anymore? What do we got? All right, let me just take a look at the snapshot and we'll see where it hit as a high, right? This thing definitely, 142.92, right? And it came out of the gates at like 50, 55, something like that. And then it shot through all of that. And I said, hey guys, this thing is playing with fire. If you're buying it up here, you are playing with fire. I would not advise of it, right? And now we're back down to 53. So hopefully we knew our exit point if we were getting this as a trader, similar to where we might be on Open Door or GameStop or AMC or anything else that is meme stock territory. You have to have a plan with those. Just because everyone's getting into them, the volume is insane. There's nothing there other than hope and hype, right? So I don't want you guys to get into these things, get burnt, and then think that the market's a scam. You are simply not doing your homework if you think that these things have staying power and they're just going to keep on running, right? If you're buying at 10, I mean, what's the game plan? Do you really think it's going to go to 20? I mean, we heard that with GameStop, and it's going to 200 or whatever they said, and then everyone got burned, right? So I don't think it's a worthwhile investment. If you want to trade it, that's a different thing. If you want to speculate on it, with a little bit of money on the side, okay, but don't go ahead and think that, oh, well, I'm buying it at 10, it's going to go to 50, because I don't see it, right? I do not see it. So that's what I got there. We've also got another stock that is generally considered overvalued, Tesla, right? Tesla has been a very volatile stock. We did get down into the 220, 250 range. I had closed and then I re-entered this position. You still got a very expensive PE. You still have analysts not knowing where this thing's going to go, right? We've got around 21% of downside. But then we also have news that sales are going really, really well in Germany. They are actually going to be raising production, right? We've got German plant plans to lift production. There we go. So if we're looking at this, currently have very good sales figures and therefore revise their production plans for the third and fourth quarter upwards. Germany is a tough market for Tesla, due in part to stiff competition from China EV rivals. Elon Musk's political activity may have also affected demand, says analyst. We've got a lot of growth there. Does it mean that the stock should have gone up 7%? I don't know. I think that there's probably more at play than simply this German production numbers. I know that the Elon pay package topping $1 trillion, I believe. Yep. Vote on what could be a $1 trillion pay package aimed at motivating Musk to lock in for the next decade. I mean, that's insane. That is a crazy amount of money. I don't know what's going to happen there, but the board does want Musk to stay on for the next 10 years. I think investors like that as well. They want him to be there. He's a controversial figure, but I think he does a lot of things well for the company. I don't know. Everyone's got an opinion on them. That's my 2 cents. So, do we see that this can have some staying power? I do. I mean, I think we've talked about this one kind of ad nauseum by now. There's a lot of things that Tesla does really well. I mean, the cars, I still like a lot of the tech that's in them more so than other EVs that I've been in. They still have a lot of things to do with robotics and battery tech and everything else we've talked about when it comes to solar insurance or Starlink or anything else with full self drive. There are just so many things that are being developed that I don't want to bet against Elon Musk. That is where I'm at. I am back into this position. Probably got, I don't know, low five figures, $14,000 in this, something like this across multiple accounts. So not a huge position at this point. I was trying to build it back up, but it kind of keeps running forward. So I don't really want to chase it. One thing that I did trade out of, puppy, want to say hi? Was Disney. I actually did get out of my Disney position completely. This one, man, it's just been a painful ride. It has been an absolute painful ride. They had all the go woke, kind of propaganda. They were trying to put a bunch of different things in kids' movies that a lot of people didn't agree with. Just a lot of different things through COVID. I mean, I've had this one for a long time. And I will say that in some regards, it looks like it could be a buy now. And that is a very tricky thing to be. So I was almost back to flat. And I said, you know what? I am tired of the struggle of what Disney is. I might regret it. It could have this 18% of upside. A lot of things with Disney Plus are doing well. The parks have been doing well. It's tricky. It really is tricky. I do think that a lot of the things that they are doing are starting to pay off. I have been in a love-hate relationship with this thing, or more of a hate relationship with this thing, because it's just been down for so long. I've been tired of looking at it. I'm glad that it got back to almost my cost basis. And I said, you know what? I've got better opportunities out there than simply waiting for Disney to maybe turn itself around. So, that being said, I got out of Disney. We can see, yes, I am trying to play some of this in Open Door, Battery Tech, and AMPX. Nothing crazy there. Executed, though. Let's see what I did buy this week. More CRM, more United Health, CrowdStrike, some more O Realty, AMD, Tesla, NextEra, NVIDIA, got back in there. That one's probably doing pretty well for me. MicroStrategy, the options trade, or I guess it's kind of an options trading ETF based on MicroStrategy and the price action in Bitcoin. So I'm trying to increase that for some dividends, more CrowdStrike, more CRM, and sold Disney, right? So that's pretty much where I sold Disney, and all of these other things are getting added to. I think there's more value in these, right? I think CRM has a lot of room to grow. They are leaning into AI. We just saw what happened with Oracle when they announced better than expected numbers, and they are leaning more into AI, right? We are looking at a stock that just went parabolic. If we look at the 5-day, that kind of gives you where we were. We went from 238 up to 344, 345, it looks like here. Massive 40% move in a given day on Oracle based on the earnings and based on the fact that they are taking on cloud giants. We've got really a push to win cloud and AI from Oracle, making Larry Ellison the CEO, now the richest man in the world. And it's tough to know. Like, this one just kind of came out of nowhere, and they just kind of planted their flag in the market and said, "Hey, we're doing this, and good luck keeping up." So the fact of where they came from, they were down to, where are we? About, I don't know, 135, 140 in April. And now we're up to 337 or 292. Sorry, average price target being 337, but we did get up to 342. And man, there's still upside here. So is it something that I want to buy into after a 40% run? I definitely don't want to buy there, but now that it's coming back down to earth. Maybe if this thing hits like 265, 275, maybe it starts to make more sense to me with 20% of upside rather than just 15. So if it comes back down, gets into a buy area, a little bit more spot where I'm comfortable buying this thing. It does make sense. Man, I still really like a lot of the other names though, right? I'm still looking at Alphabet. I still look at Amazon, right? I still see some of these names having more upside. Google's probably eaten up a lot of that after the Apple and Google lawsuit was kind of, won in their favor loosely. But Amazon still has a ton of upside, right? I do like that name. I think they have more levers to pull than what an Oracle does. And I already have a pretty large position in Amazon, so I'm comfortable there. Nvidia, I just showed you guys, I bought it in the 160s, 167. So we're up $10 this week on those couple shares. Nothing crazy, but we still have 18% of upside, and I do believe it's going to get there. With or without China, I think that Nvidia has the greatest chips that are out there currently. AMD is definitely in the beginning innings of forming some sort of comeback there. So I think both of those are ones that I would rather buy into. AMD, NVIDIA, Amazon, probably more my lane than Oracle for a couple different reasons. I mean, I kind of covered one, NVIDIA's got the best chips. Two, AMD's in the beginning innings. Amazon has more levers to pull on, and I think that they can really outperform in a lot of them, or in the majority of the markets that they get into. So I don't want to bet against those. I'm already in those. I don't really follow Oracle that much, but it is one worth watching. I mean, it definitely is. So CRM, I told you guys about that one. I'm still looking there. We still have a huge amount of upside when it comes to CRM. So I mean, do we hit 37%? I'm not too sure. Could we go to 20%? And I would be very happy with a 20% gain here. So yeah, 364, 388, 350, 400 buy price targets. Citibank says 276, but coming from 242, even 276 looks like a decent 10-12% gain from here. So I'm fine with that. I think it's got a lot more room left to go. I really think that they are being conservative with their numbers and their outlook for the next quarter's earnings. I think we're probably going to get to, high single digits, low double digits when it comes to their growth. And that's somewhere where I want to be. They sold off on a lot of, the guide down. The quarter didn't go perfectly, but they are really growing in a lot of those different areas. And the agent bot, I forget what that's called. They're going to be rolling out a lot more customer service tools that are really going to help get their business, rolling faster, have more automation, and still be winning a lot of these big contracts. So long term, I'm bullish on them. Do I think it's going to be an immediate turnaround? I don't. I think we've got at least 3-6 months before we really get another quarter or two under our belt, and we see if their numbers really can outperform some of these conservative guides that they have put into the matrix, right? So that's where I'm at. Now going forward, off the list of like, what do we want to buy this week, right? And I mean, this is just a little sticky note that I keep at the my other monitor. NVIDIA, Tesla, Amazon, Eli Lilly, NextEra Energy, CrowdStrike, Costco, Bank of America, AMD, and then IBIT, which is Bitcoin. Bitcoin is up to about 116 at last check. I mean, it's probably changed now because I gave it like 20 minutes. So it's probably, I don't know, added plus or minus $2,000. So that one's tricky to know, but where do we want to go from here? NVIDIA, yeah, they traded down and now they're back up. Tesla, they've already been on that run. I don't really want to buy into that. I'd like to buy that around like the 350 mark. Meta, I do like Meta, but what happens if rates come down? Who benefits the most from that? You would think Bank of America could be one of the ones that could get more lending if rates do come back down. Although with the stretched consumer, it's tough to know. So Bank of America has already been doing really well. About 6% of upside. I'd probably lean more to a regional bank if I was going to bet on housing, right? I think there's going to be better regions that are going to be buying more housing or refinancing or taking out mortgages, and others might not be doing as well. Some banks aren't going to lend themselves to being a mortgage broker as much as like a a smaller regional bank might have more of a pulse on that individual area. So Bank of America makes sense as some of these rates come down, but some of the smaller regional banks are probably more where I would hang my hat right now. You'd have to do some research on what areas are going to see more of a boom from rates coming down and who's got more building going on. That probably leans into some of that open door knowledge, right? Who's buying and where? What areas have more jobs being created, then more unemployment on the rise, right? So I think that there are going to be those pockets where the more building and more buying is going to happen, more refi, more mortgage applications. So that is going to play a factor, right? So a national bank might not have that on lock. So NVIDIA rose, Tesla rose, AMD's kind of come up. Eli Lilly, still love it. We still got around 20%. I still really like that name. I still think that UNH, I believe they are going to be meeting with Trump. Man, I still think that this has some room to run. Granted, it's not on this list, but after some of this downturn, I think that this thing has room to go up. I really do. I don't think that this number is indicative of where it really could go. I think someone probably came up with a 198 as, all the S was hitting the fan, if you will. So I don't necessarily think that this is going to go that low. I really, really do not. I'm trying to see who came out with the 198 and when it was. Baird, this was exactly a month ago. So 814, that is when problems were just hitting every which way. And we were probably down in this 230, 250-ish range, right? So if we were at 250 and he thought that, hey, we're just going to keep on going down, from that point, it was only 20% lower, and now it's 40-ish% lower, give or take. So I don't necessarily think that we're going 40% down from here. It probably looked a lot more plausible when we were closing at 250 to say, hey, yeah, this thing could hit 198. But now we've got more news, right? We've got more forward momentum. We've got UNH meeting with Trump. We've got a lot of different things out there as to what's going on with prescriptions and funding, right? So I think that UNH could be purchased. Did it have a massive sell-off and then kind of a bit of a correction back higher? Yeah, so I don't know that I really want to rush in at 350. If we get back closer to 300, maybe that's where I want to aim for. NextEra, I mean, utilities always make sense to me when we've got a lot more people looking to build out, right? We've got a lot more data center. We've got a lot more homes that are going to be built as rates come down. We've got a lot more demand on the grid with EV. So I think that utilities make sense in this space. We do have 19% of upside. I mean, I really think the safety of going into something like a utility with a lot of the uncertainty out there, with 19% of upside, with the demand on the grid, with the 3% dividend, I mean, yeah, PE is a little bit rich for a utility. Man, that is attractive, right? We did set this in a low, and then we have higher lows and higher highs, which is going to generally be in an uptrend. So we have this channel of where it's pushing higher on the low end, but also higher closes on the high end, right? So we don't see high, low, low, low. We see, yeah, it went down, but then we're starting to break out to the upside. So maybe we can break past this point of resistance, probably somewhere in that mix, and we can probably see this thing go to some of these 80 kind of price points. So maybe that does make sense. Maybe if you want some security, maybe you play this one. Maybe if you don't, you're into something like some of the big tech names, right? Maybe NASDAQ names that as rates come down, they should be doing a little bit better as well. All of these that are on this list have a lot of cash on the sidelines, but they can refi and get some of their rates cheaper, depending on what's out there per company. So Costco makes sense from the standpoint that rates could potentially come down and some homes might have a little bit more disposable income, but at the same side, you have inflation going higher. Which is ultimately going to be tough to know where we go from there. So yeah, we've got all those things kind of in play. I would probably lean on something like a NextEra Energy right now. I think that is where I'm going to lean. So I am going to say NextEra. I think we added it a couple weeks ago. I think it makes sense here. There's still a lot of demand. We've got a lot of different reasons that NextEra Energy could have a catalyst going higher, from rates coming down to more demand on the grid to more EV sales. We're seeing that. In Germany, yes, Tesla's losing market share, but everyone seems to have an EV out right now. Granted, I think Dodge and Stellantis has scrapped the Ram 1500 EV, but there is a lot of demand out there on the electrical grid with everything that we plug in anymore. So that is going to be my ad for this week. Thank you guys very much for stopping by. Please make sure you like, subscribe, and share, and I will catch you guys in the next one. Take care.